Hello and welcome to this Wednesday, January 15th of 2025, CPI Day with Jason Shapiro from crowdedmarketreport.com. Let's see if we can find anything here today. CPI came out a little better than expected, which, considering I think how scared people were of it not doing that, was probably a lot better than expected. Because last week, we had these situations where numbers were coming out stronger, and this market was not liking it because it meant interest rates were going higher, and we're getting towards that 5% psychological level apparently, and stock investors hated it. So the fact that it didn't do that today, I think, was a big relief. And what should have happened? Well, stocks should have gone up, which they did. Bonds, the S&P went up over 100 points today. And that was way off the high as well. Bonds went up, although they stopped going up pretty quickly. They made it for about, till about 10:30 and then just went nowhere. And more of that in a second. And the dollar, went down, and commodities went up. So let's talk about a few of those. First of all, I've been focusing a lot on and speaking a lot about silver. I know a lot of people were looking to pick the bottom in bonds, and my idea was based on positioning, based on market action and the tape, that silver would be the place to do that. If rates were going to go down, I thought silver was the best place to do it. This is the least long they've been in silver since way back in March. Silver bottomed here, even as bonds were continuing to go down. So the trade was already working. So let's go with the trades that are already working, especially when they're not supposed to, rather than try and pick the bottom in bonds. And that trade has worked. It had a rough day clearly on Monday, but it's gotten all of that back. So I continue to believe if you are thinking rates are going to go down, silver is the place to take the best advantage of that. And the market is agreeing with me to this point for the most part. So even better, right? Because the market knows better than I do, clearly. The currencies were kind of interesting today because the euro actually closed down today, right? Which was, I would call it, pretty surprising. When the number came out, look what the euro did. Who, in their right mind, said, okay, the U.S. CPI came out weaker, would have sold euro into that. And as it turned out, that was the trade, right? Very difficult to do. Not a very good tape for the euro. With that came down some of the other ones, like the British pound, did the same type of thing, but came back a lot better. Now, the pound had some news last night that was arguably bearish pound, and we came into this and it had already rebounded from that, and then it ripped, and then it retested that, and then it stayed above it. What do we do there? The tough call. Is that a failure on bad news? We had long discussions about this today in our Discord. Tough call, but we do have a GDP number coming out tonight in the UK. And maybe on a weaker GDP number, if we can fail on that again, the pound could be a good buy. That's kind of what I'm thinking there. And Bitcoin, of course, went up. Because that's what Bitcoin does. It actually retested 100,000 today. So it's funny because we had this big, head and shoulders here that everybody on the planet seemed to be looking at. It actually broke through it for about an hour or so a few days ago and just came right back up. So, these heavily watched head and shoulders, I find, often fail because they're just too heavily watched, right? So that's what kind of happened there. So I think that was really the main thing today. There wasn't any big surprise, although, like I say, other than the euro, right? But even the pound, if you were looking to buy this, and you could have come in after the number last night in England, which was somewhat bearish pound, and the fact that it rebounded off of that, you could have been saying, okay, it's pretty strong relative to where it should be, and you could have gotten long. But again, it was kind of like what we were talking about in the video yesterday about the stock market. The stock market yesterday had some good news, arguably, based on the PPI. It went up and then went down a lot and then finished up. So it was very hard to have bought that and stayed long that because the move down yesterday at one point was pretty harsh. And maybe it was the same type of thing in the pound today, right? You could have tried to buy it, but to stay long it, especially when it went down here by, 11:30, was very tough. So like I was saying yesterday, the tougher the trade, the tougher it is to hold on to it, probably the better. So I am looking to be long pound. I'm not long pound yet, but something to watch out for, okay? And similar to, and think about what happened with the stocks yesterday, right? We had like a reversal day in the stock market on Monday. Then we had this whippy action the second day. And then the third day it took off. I see that a lot in markets that turn. Reversal day candle, whippy action, and then follow through. Maybe that's what we see in pound tomorrow too. I don't know, but something to watch out for. Other than that, that was kind of the story today. Nothing really too surprising. I mean, crude oil was up $3 today. And we know that some of our favorite fades, I've been focusing a lot on energy, as most people know, for the last few weeks. And I mean, there has been a pretty substantial move in crude here. And some of our favorite fades are selling into it, right? Because the recession's coming. We're back to that story. And speaking, by the way, of recession, I noticed that the DAX today hit an all-time high. And the Euro Stoxx index, Euro Stoxx 50, is not far behind. Now, I'm told that the German economy has been in recession for the last 2 years. Well, then what's the DAX doing at all-time highs? And it gets to the point, just because there's a recession doesn't mean that the stock market has to go down, right? It depends where the positioning is going into it. If everybody knows the recession is coming, everybody's short, well, then the stock market doesn't have to go down. You could argue it's discounting the fact that we're going to come out of recession, right? You can argue a million things, but I would argue that the market being a discounting mechanism, just saying recession doesn't mean the market has to go down. And the DAX is the perfect example of that, okay? Something to think about. Everybody keeps focusing on this recession thing, and when's the recession going to come? And it may not matter, is my point, right? So, something to think about there as well, all right? So, I hope that those ideas help. I hope these observations help. Please like the video if you like it. Please check us out on crowdedmarketreport.com, our Substack, our YouTube videos, even our Twitter feed. Check it all out. It's all there for you. And always happy to hear questions and comments. And we'll talk again soon. I hope everybody's doing well. Take it easy.